Alright, so today I did 3 put credit spreads, or actually I did 3 trades. 2 put credit spreads and 1 naked put. So I did a Roku put spread at 160, 155 because I saw Roku dropped hard today. I put an exaggerated order in and it got filled. So 160, 155, which I think should be very safe. And I did another one on Fiverr at 95.90. Now Fiverr, I already had a put spread on Fiverr at around 115, 110, but it got breached today, so I decided to sell another one even lower, making it even safer, hopefully. And I sold a naked put on Lightspeed at a 30 strike. I mean, can't get lower than that. Collected $1. I did 1 contract, and if you saw yesterday's video, you saw that it only takes like $150 buying power. And just because it takes $150 buying power doesn't mean that I have to do 10 contracts. I still have to assume that the trade can go bad and that I have to manage it. So I always start off with 1 contract. That's definitely a lesson learned. So I'm just gonna add the trades that I just mentioned today. So I'm just gonna copy a line here, paste it at the bottom here. So today is December 15. I'm just adding the put spread in my trade log. I did FVRR and I did Roku. Yeah, so Fiverr was 95.90. And it deserves to be done naked, but whatever. I don't have the buying power for it right now. And next I did Roku and January 21st Roku ROKU, and I did 160, 155. Just gonna place it at the top here with the other January 21st, doesn't matter where exactly. Oh, and I forgot to add Lightspeed, so I'm gonna add this now. So it was done December 15, 2021, LSPD, naked. I did a 30 strike for $1 and January 21st, and I'll put that back up there as well. Okay, so now that I have Fiverr, so I initially had the Fiverr put spread at 115, 110. It got breached today. So if you look at the stock today, FVRR, so the low of the day you could see is 110. So it got completely breached. And I didn't do anything to it. Still a lot of time left for expiry, over 30 days. And as you can see, it looks like it's coming back up. They might both expire worthless. But the plan, of course, is to try and close it for 50% profit. Now, how would I manage this put spread? Now, right now, because of my buying power, I'm not happy with the available buying power that I have left. I'm not comfortable rolling and saving trades. Usually, a put spread, I'll try to save it by either transforming it into a naked put or by increasing the contract of the spread. So my plan with the Fiverr put spread, if it gets breached again, is to sell a call spread against it. So let me show you what that looks like. So I'll just click create order here on the put spread that I have, and then I'll turn it into a call spread. I'm just going to click on call over here. It switches it to a call. But then I'm going to sell a call spread that's out of the money, of course. So right now the stock's at 120, so I would probably sell for the same expiry. So I'm going to turn the put spread into an iron condor by adding a call spread to it. Now the risk with that is I get breached on the call spread because I'm selling a call spread to mitigate a put spread. So I'm usually basically selling a call spread on red day, and what usually happens is at the end the call spread gets breached. But let's say that's my plan. I don't want to roll trade. I just want to close them for a loss, and I'm just trying to reduce max loss by selling a call spread. So if I do that approach, I could probably do a 140, 145 call spread for maybe, I don't know, 70 cents, 80 cents. And therefore I collected $1 from the put spread, I collected $1 from the call spread. I can't lose more than $5 minus both credits received. So I'm losing about, max loss would be about $3.20. And hopefully, because my new credit now is $1.80, I can now try to close the trade for 90 cents. If Fiverr lands in between 115 and 140. So that would be one way of managing this put spread if I don't want to increase risk. Another way to save the trade is the tasty trade mechanics. would be when there's 21 days left in the trade. Right now I've got 37 days, but when there's 21 days, I can decide to either roll the trade as is or close it for a loss if IVR is low, below 30. But let's say IVR is high and my put spread is breached. So what I could do is roll it as is. Right now, because I'm not breached, I'll be able to roll it for a credit. So what I could do is, see, I don't even have February yet, so it's too early to roll to the next month. But let's say I wanted to roll it to March and I keep the same strikes. So add another put, do the exact same strike, but I'm just rolling it to March. I accidentally picked December 17, so March over here. So I would collect a small credit of about maybe half of $1.70. I could collect a credit of maybe 80 cents if I roll it as is to March. So basically, I'm collecting another credit, not increasing the max loss. So now my max loss will be $5 minus the dollar collected from the first spread, minus 80 cents from rolling it. And now I'm just giving the trade until March to stay above 115. Now, what would have happened if I rolled it now if it were breached? So just to simulate the example, Fiverr is at 120. So let's say I had a 125 and 120 put spread and it was breached because right now it's trading at 120. Let's see if I can roll it as is to March. Would I be able to roll it for a credit? So if I go to March and then sell the 125 and then buy the 120, so March 120, can I roll it for a credit? So as you can see, I cannot roll it for a credit, but I can roll it for a small debit. So if it's breached, it looks like I can still roll it, but I'll have to pay. But I can compensate. Well, it depends how much it's breached, right? But I can compensate this debit here by adding a call spread to the trade for March. So that would be another way to roll it if I don't want to add risk to the trade, if I don't want to increase the contract, and if I don't want to roll it naked. Because I did that with Roku. I had a put spread on Roku, and I ended up rolling it naked, thinking that with the 160 strike and the 120 strike was very safe. And as you can see, Roku just keeps dropping. If I show you the chart here, today Roku dropped all the way to 190. So only 30 points away from my 160 strike, and my expiry is January. My expiry is January 2023. So it's not good. As you can see, it's showing a big unrealized loss. Not only that, but it's using up a lot of buying power. So here, let me show you the buying power. Roku is a 50% stock, 50% margin requirement stock. So when I initially rolled, I think Roku was around like 260, 270. And see, when I rolled to 120, it was only taking 1800. And in my mind, Roku's not going to drop more than that. And then I had the 160 strike as well. I think initially it was at 300. So it was only taking 2400. But now Roku dropped today all the way to 190. So it's taking 6,500 US, this 160 strike. And the 120 strike is taking 2,500 US out of me. So that's a problem with trying to save a spread by rolling it naked if you don't have the buying power for it, of course. So I'm not going to do that for my existing put spreads because I do have a bunch of put spreads right now, as you can see. So yeah, so I'll see what happens. I won't manage it, so I won't sell a call spread unless the put spread is breached. But for the moment, nothing is breached. Let's see Coin. See, Coin is showing a small profit if I had done it naked, but it's not breached. See, it's at 260, but it's not that closable yet. I can close it for about 80 cents, so not enough. I've got Dash here, which was breached today, but it's no longer breached, so I won't do anything. I think Dash is at 160, I believe, or 158, 157, okay. And then I've got DocuSign at 125, 120. So it's profitable. So you can see the naked put is profitable, but the spread is not really entirely closable. But it's not in the money, so I'm not going to manage it. Etsy as well, I'm not going to manage it. Etsy's trading at 230. Yeah. So I'm not going to manage it right now. I'm just going to hold on to it. Fiverr 115 we just saw, 95, 90. This one should be closable because Fiverr came back up, and I think I caught this, and I think I caught this spread almost at the low of the day. So let's see if it's closable actually. So it's trading for about 60 cents. So yeah, not really closable with commissions and everything. See, the naked put is already 22% profitable, but I only did one contract. Netflix 535 safe. What is Netflix trading at? Netflix is trading at 605, so that's good. So hopefully this rally continues. I mean, look, if you look at the SPY today or even the Qs, it just rallied after the Fed announcement. But from experience, it's too early to get excited because it could still reverse tomorrow or Friday. I've seen it happen before. But for now, if it continues this way, the spreads that I have should be fine, hopefully. What else do I have? I've got Netflix. I've got Roku that I opened today. This one should be closable as well. It's already, if I had done it naked, it's already $160 profit. Is it closable? Yeah, it's for 75 cents, so not yet closable, but yeah, it's profitable. Got Spotify here, 200, 195. It's not yet, it's almost closable. I've got Square. I don't think Square is doing well. I've got the 160 strike, and it's at 173. And even today, it almost breached. It dropped to 162. So not closable yet. What else do I have? I've got Square. I've got Tesla. This one should be fine. 800, 790 for $2. And I've got Zoom 150, 145. Zoom should be closable. He's showing me a nice profit. Showing me a 54% profit on the naked put, so the spread should be 50% profitable. So let's see what it's worth right now. Yeah, 40 plus 75, $1.10, so it's about 60 cents. So it's not yet closable as a spread, but as a naked put, it would have been absolutely closable. Yeah, so for the moment, I'm doing spreads because of my buying power, and I think my management style will be to not necessarily roll it or save it by turning it into naked put or increasing the contracts, but I'll just reduce max loss with a call spread and then sell a new put spread even lower because my initial put spread got breached, so it makes sense to sell a new put spread lower. And so basically I'm throwing small bets out there on different underlyings, all having my put spreads, the strikes that I choose are at expected move, so it's around, they should have an 80% chance of winning, and yeah, if they don't, well, I try to manage it and I'll keep selling another one. So if I have 10 trades, let's say 8 of them are winners. Now they're not, I don't make the full $1 profit because I close it early, but let's say 2 of them are losers. Well, instead of losing $4, I'm going to reduce that $4 by selling a call spread, and I'm going to make up for it by selling a new put spread lower for a further expiry, so that eventually altogether should make up for it. Although now I'm tempted to hold to expiry just to collect full profit, but it's a little bit stressful to hold to profit all these spreads because anything can happen in the market, and then I'm down $4 on each of these spreads. So if there's a decent profit, I'd rather close the trade. Now I just want to look at an example. If there was 21 days to go on a put spread that is breached. So what is 21 days? I think January 7th is 21 days. So I'm just looking for 21 days. Is it January 7th? No, 23. Yeah, 23 days. Okay. So let's say I had the January 7th expiry instead, and let's say I had the 165, 160 spread. So I had the 165, 160 on Dash, for example, just taking anything as an example. So let's say I had this spread 165, 160, stock is trading 157, and it's expiring in 21 days. So according to Tasty Trade, this is when I should roll the trade. Assuming IVR is over 30, I should roll it and not just close it. If it's not profitable, then I should roll it. So if I were to roll, so right now if I want to close it, see it's trading for about 2 plus 4 is 6, so it's trading for about $3. I opened this for $1. It's worth $3 right now, so I would lose $2 to close the trade. What happens if I add a put, if I roll it to let's say February? So what happens if I roll it to February? Same strike, so 165, February 160. So let's see if I'm able to roll this for a credit even if it's breached. So you see, even when it's breached, I cannot roll it for a credit, but because maybe there's 21 days remaining, it's still very close. I mean, it's still almost break even, but it's going to be for a small debit. So what I can do is add a call spread to it. So if I roll this, let's say for 20 cents, I have to pay 20 cents. Then I will add a call spread to it. Let's see how much a call spread would give me. So I'll turn this into a call. I would probably go further, of course. Let's say the 180, 185 call spread. But then, problem is I risk losing on the call side. But that would be the mechanical way of rolling it. So February call spread 180, 185. So I would collect almost $1.50 by doing that. I pay 20 cents to roll the put spread alone, but by adding a call spread, I collect an extra $1.50. But now I have to worry about two things. I have to worry about the put side and I have to worry about the call side. So Dash would need to stay between 165 and 180. So I would probably go further. So let's try 190, 195. Basically, I'm looking for the call spread that pays for the debit that I had to pay when I rolled the put spread. So yeah, this one's going to be a very small credit. So this is probably going to be the one that pays for my debit. So this way I'd be rolling my breached put spread to February by adding a call spread and without paying for it, maybe a small credit, 145. I'm left with 70 cents. So maybe, yeah, I think it would be break even this way. I could do 185 if I want a bigger credit, but like I said, there's a risk that the call side gets breached. Yeah, and these values might not even be accurate because it is after hours. All right, if you have any questions in the comment section below. Like always, if you can open an account with Questrade to trade on the stock market, use my referral link below to get $50 in free commissions. Thanks for watching.